Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And for those of us that are long-term Alibaba holders, it was actually a good week. We're going to talk about the news and why, and it's something that's very unusual. We'll get to it.
Two Super Guys Trade Stocks.
So, Dylan, this guy here wearing the crown, do you know who that is? It's not Winnie the Pooh. I'm just curious if you know who that is.
I have no idea who that. Yes, it's Xi Jinping.
Yeah, it's usually pink. So, in a typical classic, lovely, like emperor kind of fashion here, he's decided, you know what? I know how to fix the fact that the Hang Seng Index is down 42% over the last 5 years here. I'll just take away the sell button. Then people will have to buy.
I'm
Brilliant.
I'm very confused as to why when the news came out, I thought I was going to wake up to Baba tanking hard because I don't think that affects American depository shares, right? That's just them.
Yeah, I can't say. I honestly I don't know if it affects the ADRs as opposed to like the just the Hong Kong shares. It's a good question. I think it's more of a internal market mechanism. There was another kind of interesting ripple of this if you look. So this is the 5-day chart for Alibaba. This is the ADRs, the American Depository Receipts. Up 1.5, 1.6% over the last 5 days. If you actually look at the Hang Seng listed, this is the 9988 HK, they're actually up 3.25%. So yeah, I didn't look at the conversion to kind of verify that. I haven't seen them be that different in terms of their weekly gains before. So I thought that was an interesting mechanism that you're going to see maybe more appreciation of the Hang Seng ones. Like maybe someone can kind of answer that down in the comments below because it's something that crossed my mind, but I'm not really sure. Um, the
Hmm.
other kind of interesting little tidbit here you notice with the both of these charts is look at that midweek divergence. It just like all of a sudden it just that took off, and that's with the institution of these new rules. um, so here's what the headlines are looking like. But China takes the biggest step yet to prop up its market. Right, so there's no doubt people have talked. There's a lot of coverage out there talking about how the Chinese equity market has been really struggling for the last few years. Right, down 42% over 5 years. That's just crazy. Billions of dollars, or sorry, trillions of dollars of market cap have evaporated. But the real kind of where the rubber meets the road here a little bit is there's two things. One is they instituted a rule that would under this order investors are not permitted to sell more shares than they buy during the first and last 30 minutes of a trading. All right,
So
that's the
that
banned sell buy.
I'm kind
Ban.
of I'm kind of confused as to why that would even make a difference, right? So like the stock market opens at a specific time. You have pre-market where there's less shares and stuff happening and post-market. But if you're trying to sell a shit ton of your stuff, it just moves the clock 30 minutes. It doesn't I don't understand how it actually helps in the long run.
Yes, I completely understand what you're saying. You know, it's an interesting point that I thought about with this is that, you were day trading for a while. I don't know if you're still currently doing
Still,
that. Yeah. So what time of day do people classically day trade, right?
very early the first 30 minutes.
Yeah, exactly. That is by far the most active. That first 30 minutes and the last 30 minutes are most active parts of the market. So I think part of the thought process here is that you may be able to put a set of brakes on any like massive moves coming right out of the gate in terms of towards the downside. So interesting. So almost
I
more like
just
a little slight friction.
I think like if we did that here, instead of the opening like New York time being 9:30 to 10 is the busiest, it would just be 10 to 10:30.
Yeah, I mean,
Like
you
I
would
don't get how
see.
this makes a difference.
I think if the U.S. intervened in the same way, you would see massive loss in confidence in the U.S. equity market. That would
Yeah,
be
that'd
a
be good.
huge sell off. And it's just interesting that you didn't see that, like you were saying with this week, that it's kind of almost
Yeah,
expected that they will, intercede in the market a little bit and manipulate it.
I was
This is market
prepared
manipulation. Really.
for like mid 60s on Baba to be honest. I was like, oh crap.
Yep, yep. So it's not the only thing that they're doing though. They're also kind of looking at interceding on short selling activities. Okay, so that's part of it. They haven't like this is the CCP we're talking about here. So getting cold hard like numbers on things is questionable or doesn't exist at least
Uh-uh.
publicly. But it seems like they're going to start trying to curtail a little bit of the downside pressure in a few different ways. I'll get to the other thing here in a second, but this is actually something that could be benefit for Alibaba shareholders for a while here. So it's considering measures to tighten IPO approvals. All right, so that would be still an issue with like getting Anchor Group or any other spinoffs of Alibaba Group that go public, which are all in the back burner as of right now. Nothing is going forward as far as I'm aware, but encourage dividend payouts. So one of the struggles with Alibaba shareholders has been that they have a lot of cash on their balance sheet, but how do they get it back to shareholders? They did talk about the 3% buyback approximately per year, and the 1.5% or so dividend payout per year. This may be a sign that the CCP be moving towards a kind of stance where they're going to allow more capital return to shareholders. So that'd be a good thing. And additionally, it aims to expedite approvals for equity funds and attract more medium to long-term investments vehicles into the stock market. So maybe more ETFs and mutual funds. Another positive development, I would say, out of that.
Okay. I don't see how this is good news in any way whatsoever. I'm very confused as to the reaction of the market at all
Well,
because you
okay,
have a government agency now interfering with the stock market, which I know that, we don't do well. I
yeah,
mean, Nancy Pelosi, they invest in it. They don't interfere. It's not like a whole different deal. They're horribly
yeah,
corrupt. But, I'm very surprised. I just don't think this is going to be good in the long term.
yeah. I get what you're saying. I think double-edged sword here, right? So, on one side, the government stepping in and influenced a kind of private market is always something that makes me very suspicious. That they can screw up more than they can fix, right? That's the idea. And if they're having to, kind of hold the market up, that's a bad sign for the underlying market's health. Okay. Now, the flip side of the coin I can take here is that when we have an episode where market confidence has been lost, like say 2008, remember when the U.S. federal government introduced TARP, their TARP program, and put $700 billion into American banks. It added a lot of confidence to the system, and I think part of what you're seeing here as a reaction is that people are now getting a little bit more confident that there's a backstop there, that the CCP is saying like, all right, we've let this thing go long enough, trillions of dollars have been lost here, that no more, we're going to start to step in the market a little bit and try to push the chips towards a longer term, like appreciating equity market that'll be good as like a tailwind to have that as a background. So what do you think of that?
Had this not been happening in a time of their biggest real estate crisis in recent memory, I would agree. I'd be like, oh, this is probably a good thing. But to me, this looks like hedging for something very bad.
Oh, okay. I I think the part of the idea is that they're going to try to buoy their equity markets. That we've talked a little bit before about how in the U.S. Home equity is only like 30% or so of the household wealth, whereas in China it was like 70%.
Mm-hmm.
We invest in the stock market a lot more as a country than
Yeah,
they do. So
100%.
maybe we can try to push back towards that. Can you go back to that other slide 1 second? I just want to show you. This is another headline. It's actually separate. But basically, there was a hedge fund that had received a 3-day trading ban as part of this as well. That it was from Monday. It was a week after the Chinese New Year that they came out, and apparently they ended up being a net buyer, but they hit the market really quick with a bunch of quantitative like trades that were selling aggressively at the market open, and that's why the market opened so negatively on Monday. And as a result, they actually stopped, basically banned them from trading for 3 days as a penalty. And this Chinese hedge fund, had to apologize.
I
So
mean,
yeah,
ethically, I don't like that at all. It does help my Baba shares.
yes, yeah. But I think this is another sign that they really are going to be. It's a multi-pronged kind of attack here, where they're going to be interceding into the Chinese equity markets with a bullish kind of outcome goal, or if you will. So I mean, for Alibaba shareholders, this could be good long-term news. This could be market bottom based upon the actual activities of the CCP.
I feel like if you're a day trader in China, your job just got hella easy because you just go long now. You just don't even try to go short. Just go long on whatever stock is trading the most.
Well, that might be what they're saying. It's just like, all right, boys, this is it. Like it's time to to go to work and be bullish from here on out. That's what they're
Yeah.
trying to do. It seems like in multiple different avenues. So let us know what you think. This is an interesting time.
Yeah. This is odd. Let us know. Have a good one.